Okay, cool. So first let's get the profile done and then we'll go from there. So yes, this is yesterday's 5-minute bars. Where did I put them? Okay, here they are. And let's change it back to RTH only. And before we get started, good morning. This is Simon with Trade and Perform Coaching. Real quick, it is Tuesday, 3/16/2021. If you'll please take a moment to read the legal notice. Basically says past performance is not indicative of future results. You can lose all your money trading futures. I'm sharing my trade plan with you in the hopes that it makes you a better trader, but my trade plan isn't for everybody. So first of all, this is what yesterday looked like. Okay, so the yellow zone is and was resistance. We can see that we pretty much opened up inside that yellow zone, came underneath, backside tested it. All right, backside tested it, rolled down. This is the point of control. So remember, value area is slippery. So one of the things I like to ask is, why did we turn there? Because there was no anomaly. It was right in the middle of value area. So when you go back and look, you take this from that point. Wait, that was yesterday intraday. We came back to, well, we didn't even make it back to the 382. But prior to that, that low was from the prior day's low from 312 to the high on 315. That was the 50-60 retrace that held the 786. So I missed that. That was on me. But that's why we found response. And you can see the structure over here to the left. See those wicks? A lot of just more basic technical analysis will say, hey, that's where the turn came from. So if you look, one of the requirements for not being bearish yesterday was we had to get below prior day's low and below value area low, right, in order to go, well, wow, something's changed. And nothing's changed. And that's the same requirement for today. You got to get below yesterday's value area low and prior day's low to have a change. It doesn't mean we can't roll down. It just means it's not bearish from a larger perspective, right? So next, let's go fix this. So first of all, overnight, you can see we've been really tight overnight. Consolidation all the way through Asia and Europe. We really haven't advanced or declined. We pushed in early Asia, and we've been kind of stuck there all the way through the overnight session, all right? If we go to ES profile, I haven't gotten to the part that I'm really interested in discussing today. So value did not move much higher. Like it did shift up from Friday, but it's still values within range, right? We're currently trading at ES 39, I want to say 61. $39.61. So we're still holding above. This was the old all-time high right here. So I'm going to change that to red and leave it there. Okay, because that would still hypothetically, if you look how we've opened up, that would be an island reversal. So if we got underneath 39.50, that would potentially send us back lower. So we're going to move. So just basic profile stuff, right? So this is going to turn to orange, meaning prior day's low. Just trying to talk everyone through it. Prior day's low is a location where we would look for potential trade back in, right? Okay, and then if you look up here, we're going to move prior day's high up. And then we're going to have a new prior day's low. We'll move that down here. Color green. Man, it's a nice spring day here. Value, let's see, points of control shifted up. Value area low, purple line. Value area high. So I want to show you something. See this area right over here? That's called a poor low. Okay. And when you have a poor low, okay, so see how when you have a poor high over here, see how these are, that when it does come up, it's relatively easy to break. So that's important strategic information. If an area is easy to break, if you see a bunch of bars in a row, what the market will often want to do is one of two things. It'll come up and it'll want to put excess. See how we put excess in up here? And once it puts in excess, then it starts to roll back to the downside. If you look at how that half hour worked, see how we came up initially? This is a poor high. See how it came in and it put some excess in at the high, then rejected back down. So people get confused about that in profile. So remember, all that has to happen is you have to just get one bar of excess. So if you look at the auction, from an auction standpoint, it came in, put excess above, and then traded back in, right? So if you look at that example, so one of two things happens. Either it breaks the easy high and it goes into trend day up, or it puts excess in and then we come back and re-auction, right? We came back and re-auctioned is all we did. But once the excess is in, this is corrected, if that makes sense to everybody, right? So over here, we need a bar to get underneath. Now remember, we're in a bull market, so the likelihood is once we get excess in underneath here, we're probably coming back this way. That makes that 39.04 and below that really critical area to set up for a potential long side trade back in from a day trading perspective, right? So we have value area high. For today, we have value area high, value area low. We have an anomaly right on the end. So I'm not going to make that white because we're already trading above it. I'm going to make it yellow. It's a critical area. It's also a prior day's high. Once we get inside that area, that's a valid anomaly. You'll see the chunk of volume that went off in there, right? If we fall back underneath this 38.55.75, the natural target is back to the point of control, because the points of control act as a natural magnet almost every day. You'll see we make excess, right? Then you'll see how we push back. So look over here. I'm going to use this as an example, right? So everyone can see the mouse, right? I'm not confused on that. Joyce, you can see it? Okay, so Joyce, this would feel, I can see having a conversation with you, how this would match what you're looking for, because so this is one of the ways you set up a larger trade, right? You go, oh, we should have excess, right? We should have excess, and we should trade back to the point of control, right? Which was down in here, right? So it makes a great target, right? So if you look at that, so if we go back and look at 310, I'm going to show you this really quick. If I go back and look at 310 on a 1.75 range, I'm not going to have enough days in there. Okay, so here's 310 in the morning. Okay, so if we pull these 2 days in, right? So this area right over here. This was a poor high up in here. All right, so I'll just mark off the whole thing, make it easy. This area was a poor high. So see how they came in and put excess up here, right? So this is excess. This is excess being put in right off the open, right? They came in, they put in excess, and it fixed this part of the chart, if that makes sense, right? So then what the market did, so the point of control was approximately here. Okay, so the market came up, put in excess, and then went back to the point of control. So why is this important? Well, first, if you trade like Peter might go, I have resistance at 39.03, and then his logical target, right, would be, well, my goal is to get it back here. And you can see, like when you look at this day, independent of any other day, it looks kind of like, okay, that's fine. In the first 2 minutes we hit the high, and then over the next 4 minutes we came back to the point of control, right? And if you look for what trade setups we'd have there, really where our trade would have set up off the 175 would have been right in this area right here, right? And if I draw the volume profile off those 3 bars, that's where the point of control was. So technically, it did not trigger till here. So for our purposes, it did not trigger till here, and it left a very short move into the point of control, right? So this is important on strategy, right? So the fact of the matter is that it was a sub 10-point rotation. It did put in excess, and from the very high, 39.03, down to 38.94, the trade did work. Now I want to show you something. If I go smaller, because see how the range is smaller? Let's say I move this to a 4-tick bar, right? So exact same chart, just on a 4-tick, right? So some of these indicators you'd have to get rid of on a 4-tick bar because it's just going to fire all over the place, right? So I'm just talking about basic structure. Ignore the other noise, right? So if you look at how this worked on a 4-bar structure, this is my last 3-bar combo. See that? So I draw those 3. Point of control's right here. Okay, so this is my entry. It retraced from 38.97 back to 39.0150. Right? Again, it's very small. And then you created another trade opportunity because there's another 3-bar combo right there. Okay, point of control on that is right here. And once it closed underneath, it then traveled 38.98 down to 38.96 1/4. There just wasn't a lot of room on the trade. So I guess the point I'm trying to make is, from a structural standpoint, the trade made sense. It did what it was supposed to do. It put excess in at the high, and then it came back to the point of control. In this particular case, and it also formed a head and shoulders over here. See this head and shoulders? 1, left shoulder, right shoulder, and it pushed into the right shoulder. Now, one of the conflicts I have is there's a lot of trades in here, right? There's a head and shoulders in here, right? I would actually count this as left shoulder, head, 50-60 retrace, you can see that there, plus right shoulder, and we pushed in every time. The problem with the highest odds method is both of them went to positive P&L within our 5-point stop. It just didn't have that much of a stretch. If you entered 38.98, 38.94.75, 3 points was the most you could have gotten out of that trade. And that was in the first 3 minutes. So that's not horrible. But when we look at that trade, we really would have wanted to be on the edge. And what you ended up with was a star into the high. It's just too much noise for me to trade this chart. But see how you get that star into the high and then the down triangle? See how you get that? And then you get a triangle down. That is so I was talking about this with Bill. Like, what do you do once you have the setup? So see how once this trap came in here, one of the best setups without waiting for the break of this is when you get a speed bar up and a triangle down. I want to show you that again. When you get a speed bar up and it's almost immediately followed by a triangle down. So speed bar, triangle down, speed bar, triangle down. You almost always get immediate movement, and it goes in both directions. If you get a yellow speed bar and a triangle up, it tends to go the other way. I don't know if I can find one in here like this. Yellow speed bar down, triangle up. It almost always tends to exit to stretch. So this is going to bleed me into 2 conversations that we have. Right? What I'm trying to figure out is something hit me about that book. I was reading that, and I was like, what was it that was so important to me in what that guy said? I'm talking about the penny stock trader in the Market Wizards book. And what he said was he was trying to compound it 3% daily. That's what he was trying to compound it. Because what he did is he sat down, he figured out on his capital that if you started with $2,500 and you compounded 3% daily, you'd have $1 million at the end of the trading year, roughly. right? And most people don't think about that, except we actually have a method for doing that, believe it or not. We have a strong method for doing that, actually. So the question becomes, because we're not computers, how do we slow that down? So I'm going to put this back up on a range that I can actually read for a second. 6. This is that same picture, by the way, with a 6 range bar, right? So I want to show you something. When you get a I'm trying to think through this process. The question becomes, how do we get a 3% trade out of this? I made my point with this, other than it went from excess and it went back to the point of control. Okay, I apologize. I know I'm all over the place this morning, but let me clarify what I wanted to say. Joyce, if you're going, hey, we have excess up here and I'm going to short for some reason, I want your natural thought process to be, hey, can we make it back to the point of control? That's how you set up that trade, to understand where the target is. That's what I was trying to come up with. I went in a roundabout way. Now I want to show you something else. Okay, first let me finish this off. Points of control. Okay, there's an anomaly right here at this value area, which probably means we're going to get a counter rotation off of it. So I'm going to make it a blue zone. And there's 2 reasons for that. A, that would complete filling in that hole just above. It would also be a retest or just an attempt to push back below the prior high, right? So we probably get a response out of this. So I'm making that a yellow zone. Also, failure to get back above probably means we sweep the range to the bottom, at least to the point of control, if not to the bottom of value. And then we have single prints at the bottom of that value area. So remember, we probably get a response off the top of this and off the bottom. So a couple of things really quick. I've already given you clear trade location, right? That's something that I don't make very clear in the day. If I was looking for longs, I'm going to mark them off here so you can see them. Oops, didn't want to do that. One for potential counter rotation trade. Good target, horrible area to locate a trade. I understand when we're strong that retail traders buy out of this area, so you have to be ready to adjust. 3, 4, 5. So if you're coming in on the day and you're unclear whether I'm sorry, I shouldn't have marked these as X's here. Let me mark this off. Dang it. Here, try that one more time. Now my brain's not functioning as fast as I want it to. 1, not a great place to trade. 2, single prints, top of single prints. 3, 4. So unless we melt today, right, those are 4 areas where you should be able to find counter rotations for a profitable trade. Why am I going through this? Because what I see is a lot of people looking at the setups and not recognizing, like, so if I get down here and I get a long setup here after this has already been tagged, I'd go, oh, that makes sense. We got underneath, we put in excess, going back to the point of control would make sense. Oh, we're at the top of the single prints, going back to the point of control would make sense. We're at the bottom of single prints, going back to value area low, and then maybe the point of control makes sense. Oh, we flushed everything, took out all the stops from the 12th, going back to the point of control makes sense. Now you have a 28-point potential trade or 24-point potential trade back to the upside, right? So those are locations for today, right? I'm going to go and show what that looked like overnight. I'm bringing over my 5-minute chart. Where's my 1, 5? It's my 2. Oops, I didn't mean to do that. 1. There we go. 1, 5. Okay. what did that look like overnight? 5 minutes. You can see we've been consolidating above that yellow, in that yellow zone or above. We've got to get below that 39.55 to go lower, or there's no dice. All right. ES profile. I don't need this down. Yes, thank you. There it is. Okay. So when I look at this now overnight, right, that's the exact same chart. I'll remove the 50/60s. And those are the locations we're looking for. Oh, F5. Use evening session. Okay. And you can see once we got above in Asia, it's held that zone all night long. You really need an impulse move underneath to make this break. Otherwise, there's got to be stops sitting underneath here, and they're just going to snap it back in once they get underneath that area. That would be my conclusion, right? So let's go and print this so you have the levels. And I'm going to add a bright blue line. That's Globex high, which they smoked everyone on who was looking for a breakout. And I think that's our enough levels for one day. There we go. We'll just stop it there. If we get underneath, we'll make the adjustments 100 points down. There's the levels. Okay, so the next thing I wanted to show was, and I'm going to use NQ as the example, is the setup, right? So what got cranky in my head last night was the guy who turned $2,500 into $50 million over the period of 10 years, right? And his goal was to compound daily at 3%, and he was doing it with penny stocks, oddly enough. But when you think about our P&L and our accounts, right? So this is important. Think if you're trading NQ, for example, and I think everyone has this set up with or without. So I'm going to make it really simple. I'm going to go off the higher time frame, right? So let me go back to yesterday. So here's what I missed yesterday, okay? So see when you see, okay, number one thing I want to point out, if you get a speed bar followed by a triangle down, see this, it usually comes in a 3-bar combo. I want to point this out to everyone. You need to add it to your list, particularly if it's coming underneath the stopped out buyer like this. This is so money. I'm going to highlight this, that you have to commit it to memory. It's totally money. You get a speed bar followed by a triangle down. Speed bar up, third bar is triangle down. That gets you paid repeatedly. It works the opposite way as well. Although you can't see there's a little white triangle here. It's triangle down, speed bar down, triangle up, right? Let's see if I find another example. No, too far. Here's yellow speed bar down, blue speed bar, triangle up. And it pays out almost immediately. That's off an 8-range NQ chart. You need a 10-point stop on that trade, and it should work in under 1 minute. Okay, I want to give those parameters again. That trade should trigger and get you paid for at least a scale within 1 minute. Right? Well, eventually you're going to stop, and this one did too, but eventually you're getting to you're getting too far away. The idea is to catch it as soon off the turn, like over here. The idea is to catch it right after you've gotten above a stopped out buyer or stopped out seller is the idea. That's where you'll get the biggest push from it, right, Matt? So in addition, so this should have been a fractal. So this is almost a 3-bar combo. This should have been a fractal right here. See, I did speed bar up, speed bar down. Okay, so see that right there? Again, it's the same setup. 1, 2, 3. Point of control. First bar above with a 10-point stop, right? So that might have gotten snagged. Might have. I'm running them with 15-point stops, but a minimum of 10. So let's say that would have been a 12.15. It would have been an 0.5 and a quarter stop, and you just survived. And I mean, here, I'll spread that out. Like I said, I do maybe a 12-point stop just to be sure. You just survived the 10-point stop there, but look at your RR, right? So here's my next point. If you catch 2 of these, so let's say you're trading 1 NQ contract, and you have, I was trying to figure out what the number was to compound, because why that really stuck with me is the guy was talking about compounding, and it automatically tells you how many contracts to increase. So let's say you had 30K and you wanted to make 3%, right? That's $900 in a day. Is that right? 30K times 0.03. Okay, $900. So, right? Follow me on this trade, right? If you're going to do that and you have to make $900 in a day, and let's say you trade 2 NQ contracts, right? And your risk on those 2, let's say it's 12 points. So it's $240 times 2. So you're risking $440 a trade. That's what you have to overcome if you get stopped, right? And you need in essence, 2 profitable trades a day with 2 contracts to get you to that number, that 3% number, right? So follow me, right? You're not guessing off the bottom, right? And you use just this setup. Once you get above the 3-bar combo, right, you take the first bar above, 12-point stop. So assuming, and that, by the way, assumes you only take 10 points, and usually you can get 10 to 20 on this, right? So technically, if you took 2 contracts, right, you scale 12 to pay for the stop of the second one, and the second one garners 20. That means you've gotten 240 plus 400, $640 in one trade off of 2 contracts. That's almost your 3%, right? And if you look as you go through the course of the day, where your next setup would come from, right? Assuming that you still have to have some type of bias, right? You still have to have some type of bias, but assuming you're using this last 3-bar combo right here, right? 1, you didn't have a fractal, but you had the speed bar, and you had the 6B followed by a star. Once you clear that, that 6B followed by a star is a powerful combo. You'll see it over here too, where once they get past it, they tend to lift off of those 3-bar combos. That's why I'm looking for 3 algos in one place, right? Again, if I highlight these 3 right here, and I take this bar right here with a 12-point stop, I've now achieved my 3% per day. 2 trades, both of them came after 10 o'clock, right? But what that 3% does, I was trying to figure out why it was so genius. It was just bugging me. But what he said was quite natural, right? He just said, I just kept increasing size based on what I know my likely profit was, which in his case was a penny for the first year of trading, right? He made $1 million in a year off of $2,500. And he's kept that formula all the way through. He just figured out how many trades, and he ran the same trade over and over and over. Well, we can go back anywhere on this trade. It's not just today, right? Here, you can go back. If I load this trade up to 60 days, let's say. We go 60 days back. We'll let it load. Don't use the event session. That'll be faster for you. Cut half the data out. So I'm going to go back. It's not like it's just been total like, oh my gosh, how would we ever figure this out type of thing, right? So I do have another requirement on the 3 rule. I like to see it verified, get underneath, and then get above. So this becomes my last 3-bar combo, and then it gets verified technically in this, but this is your 3-bar combo coming down right here. All right, I'm going to show you that. 1, 2, 3. Okay. This is the first positive bar above that 3-bar combo. Okay, that was 60 days ago. It was on January 8th, right? In addition, once you get above your stopped out, what you don't have is your stopped out buyer. It's over here. But see, once you get over that stopped out buyer, see yellow speed bar down, triangle up, 10-point stop clearly keeps you within that trade. And it pushes you to profitability, right? You get underneath your stopped out buyer, right? Speed bar, triangle down. 3-bar, 1, 2, no 3-bar combo there. Unfortunately, it's just an apex. But you do get a 3-bar combo over here. No. Not close enough. But the point is you still get the, once you get underneath the stopped out buyer, stopped out seller in this case, blue speed bar, triangle down. Again, it pays you almost immediately. These are 8-point trades. So this is, if you entered here, right, this is 30.15 roughly down to 29.97, almost 20 points in trade in one little move right there, right? So what I want to work on with the guys I'm coaching, as you know, it's very, very important for me that y'all get profitable. And I want to hone in on these 2 setups because I know they're doable, along with the math of trying to target that 0.03% a day and compounding it daily. Because we do it almost every day, right? If you think about it, go figure out what your account is and go do the math. Compound 3% daily for a year. It's a lot of money, right? And we do this almost every day. Does anyone have questions? Did I explain clearly what I'm trying to do? And then tomorrow or later today, I'll cover how you double the position. Does everyone understand what I'm talking about? Matt, was I clear or was I fuzzy about what I want? Okay. And then, Matt, in order to gauge what you're doing, right, so the 3% daily, most of the time people will say that's wrong, but what that does is it gives you structure to look for, right? And then do the math with how many trades it would take you. Like go through and do the math on the backside test. What if you got stopped? So then the question becomes, well, what if you took let's say hypothetically you took a long here, right? Let's say hypothetically you took a long here. Well, count your stops, right? So go back and then put in the logic of, third, fourth rail, trade locations for longs and targeting back. Because sometimes you're going to exceed that 10 points. Like you're going to get 20 or 30 points on NQ. You're going to get 10 to 15 on ES at times, right? So that's what I'm attempting to show. And the easiest way to wait for that is to wait until you get a stopped out buyer or a stopped out seller. That's the easiest way to do it. So that's my trade plan for today, is to do just that. Hunt those down when you see them, what I pointed out, call it out, right? And we'll go from there. Hold on a second here. F5. Don't use evening session. And I'm going to use the VWAP only on 1 chart instead of 2. I can clearly tell from the 1.5 where we are on the 2 range. I don't think we have enough range to trade the 2 range yet. I just don't think we do. So, and you can see the range is pretty tight starting the day, and that is because we are banging up against that yellow zone, right? So they haven't done a very good job of getting below it, and so we'll see. NQ's up another 109 points this morning, and we'll see where the setup is. There's no stopped out seller yet, not on an 8 range. I'll look on a 5 range as well. Stopped out seller on the 5 range is a little bit low, is right here. And I have NQ up into a resistance point. I need to redo the profile there real quick. Let's just move this over. Okay. Thank God. And it's still above prior day's high, although we are into a resistance zone on NQ. It's from 13,168 to 13,185, basically the high of the day, and we are below the stopped out buyer, by the way. And the point of control is way back there at 12,950. Stopped out buyer and stopped out seller in the exact same place on NQ. And ES is obviously just grinding up towards the high. Excuse me one second. Pushing up towards Globex high. NQ pushing up towards its highs as well. So see when you're getting these speed bars, if this was anywhere but where we're stuck right now, speed bar, triangle up, you'll tend to push away from that, right? That's like, the problem is we're right at the high. It's on an 8 range. Again, speed bar, triangle up will generally push away. On ES, I think you got to give it 3 points to find out if it'll work on a 1.5 range bar, right? And it works better on NQ than it does on ES. Econ wise, let me stop the preview.